All right, traders, welcome to this video on the stochastic indicator, RSI. We're not going to talk about the RSI today or the MACD, but maybe we'll do some comparisons in the future. Right now, I just want to get a very, very important concept and then an extra little trading tip under your belt for you with regard to this indicator. So, numero uno. Many people treat it as an oscillator. They think that it is an overbought, oversold indicator, and that is not actually 100% true. That is not the truth, the whole truth, and nothing but the truth, so help you God. It is a half-truth. So, George Lane, who programmed this indicator, created it. Remember, all indicators are math equations, math functions to be more specific. So, in that sense, here comes a top dog trading heresy. In that sense, indicators are never really wrong, in the sense that they measure or they plot on your chart the mathematical formula accurately and correctly, and it's never wrong in that sense. Now, obviously, that's different than saying it's going to make you money, but you can never say that indicators are literally wrong. But this should not, in my opinion, this should not be called oversold here, because that implies then the market's going to go up. I think it has a subconscious connotation in most people's minds, used to for me at least. And actually, what it really is saying is because George Lane put an artificial floor in the formula for the indicator, saying that the indicator cannot go below zero. So if you think of that, what that really means is that price can go lower, right? So indicator goes down to zero, price goes down, and the indicator is not allowed to go down any further, but price on your chart still can. So again, the just kind of linguistic implication when we use the term oversold is that the market should go up, and that's maybe being a little stickler here for it. But I think that the power of the mind is very strong, and therefore I don't want to use linguistics that would subconsciously affect the way that I'll trade. So I do not call them overbought and oversold because they literally are not. When momentum, again, it's a momentum indicator. Momentum is strength. And so when it comes down here and hits the bottom, price can keep going down and down. In fact, technically, that is a bearish strength signal. So it's more accurate to say that's a bearish momentum strength signal than to say it's an oversold signal. Oversold implies up. Bearish momentum signal implies down. And that's really a better indication of it. All right. So, and then when we get into the middle of the range like here, okay, that indicates, well, there's no strong momentum going up, no strong momentum going down, and this is going to be a little choppy period of time. There's no real clarity of strength up or down. Okay, so now that we got those tidbits under our belt, let me show you a little pattern here that I just love to trade. All right, so and there it is right there. So it's this. Now, you don't get this very often. Like I say, this is a little pro tip, a little inside intel here. Now, as we know, we often get head and shoulder patterns on price bars, right? So you can get big head and shoulder patterns, you can get double tops, wedges, triangles, all these kind of patterns. So here is the pro tip. You can get those kind of patterns on indicators as well, not just price bars. So just the tip for today is this. Let me bring my little yellow highlighter up here. So we've got a reverse head and shoulders here. So this would be your left shoulder. That would be your head. And that would be your right shoulder. So when I'm looking for, again, remember the real mathematical meaning of this is strength down. So I'm not going to buy here. I'm not going to buy there. I'm going to buy here. Because now it's been down here for a while, and then this would be the way that I would use it as an oscillator. Not just getting down there for the first time. I'm going to wait for a little momentum shift. I call these momentum shift patterns. And we've got the reverse head and shoulders on momentum. And by the way, I look for that on K, the black line, not D. If you get it on D, that could be good too. But then I'm like, okay, now we've got a momentum shift. There's your low. And up she goes. And by the way, just as a little tip for you to look into the future, you can find double tops. They're not quite as good. These head and shoulder patterns I find to be very, very good. You can use them on other indicators as well. I'm showing it to you on the traditional stochastic indicator here, obviously. But just to give you a heads up to test it on some other indicators, try it, and it will, like this pattern will work better on some than others. This one actually works pretty good on the stochastic. And when you're taking your trades, again, you're not going to be able to get this pattern all the time, but when you are getting a trade set up that looks pretty good to you, notice if this pattern is there. And if it is, I consider that a much higher probability trade. So, by the way, if you want to get the cycle indicator I use, I don't actually use the traditional stochastic indicator. It's okay. It's pretty good. I prefer a modified stochastic that I use for timing my entries with more precision and accuracy. And I'd be happy to share that with you, help you get it set up on your charts. I have a live webinar that I recorded, so now it's recorded, so you can watch it at your leisure anytime that you want. And just go over to indicatorwebinar.com and show you what indicator it is, how to modify it, how to trade it, and it's all my gift to you. All right, my friends, hope that was helpful for you. Look for these patterns. They are really, really good when you get them, and they will add to the probability of a trade when you have other things along with them. Again, I wouldn't trade this just alone as a trade setup, but I find that it really does add to the probability of the trade when I do get them. So enjoy.